welcome to this Bell Direct monthly update. I'm Julia Lee, an equity strategist with Bell Direct. And after 3 consecutive months of losses, finally we've seen the ASX 200 with a positive monthly gain. We've seen the market gaining 2.9% for the month, and all sectors did trade higher with the exceptions of the utilities and the telecom space, these two sectors being hit by rising US bond yields. But the best performing sectors were the energy sector, helped along by oil prices. We saw an increase of 10% from the energy sector, and the material space up by 7.4%. And next up was healthcare, which was up 3.5%. Having a look at the best and the worst performers in the ASX 200. And the best performers, Beach Petroleum in the energy space, gaining a massive 25% for the month. Lynas in the rare earth space up by 21%. And we saw Premier Investments up by 17%. But the worst performers, AMP down 19% after some of those horrible revelations from the Royal Commission into Financial Services. Australian pharmaceutical industries down by 18% on weaker sales, and G8 Education down by 16% after a weak update at its annual general meeting. But looking at the markets at the moment, and it is about the macro cycle, at the moment we're in an environment where we are seeing rising global inflation and rising growth. And that's a bit of a sweet spot for equity markets. Things like energy tend to perform well, and equity markets also perform well. The problem is that the next phase is rising inflation and slowing growth, and that tends to be a much more difficult environment for equities. So what we are seeing are traders and investors trying to time when that inflection point might occur, and that's causing volatility in terms of the markets. Of course, not helping things is watching US interest rates and having a look at the 10-year yields. This is a 1-year chart, and you can see how much it's been rising. At the moment, we have seen a spike above 3% for the 10-year yields in the US, and that's having a big impact on return expectations of different asset classes across the globe. Of course, this also ends a 36-year bond market in terms of those US bond prices. In particular, we have seen bond proxies hit, and this next graph is a graph of some of those bond proxies on the Australian market. We have Sydney Airports in dark blue, Transurban in light blue, and the property sector in purple. And you can see that the peaks and the troughs in the share price graph tend to be around the same time and match up very well to what's happening in terms of US interest rates. In particular, you can see that Sydney Airports, Transurban and the property sector have seen a sharp decline from December last year to the present moment, and that coincides with 10-year bond yields rising quite strongly throughout that period. Looking forward though, we are going to be watching the bank reporting season in May. We will see 3 out of the big 4 banks reporting earnings, and here you can see what Bell Potter is expecting in terms of cash earnings per share, as well as the dividends per share as well. Having a look at the bank reporting season, but it is likely to be clouded by the Royal Commission into Financial Services, and in particular the rising regulatory costs, compliance costs, as well as perhaps a need to separate out some of the businesses like wealth. We're also going into May, and May tends to be a weak time for the Australian share market. In fact, it is the worst month of the year when the numbers are crunched since 2000, with the average loss being 1% for the month of May. So all up, sell in May and go away may be the mantra this year, but still watching the macro cycle. And at the moment, we're still in the phase of rising inflation and rising growth, which does tend to be good news for equities, especially the energy sector. And we've seen that being reflected in this month's numbers. I'm Julia Lee, an equity strategist from Bell Direct. Hope to see you next month.